One major thing is about the immigration restriction. We know that average annual diaspora remittance from US about 20 billion in the past 5 years or thereabout. So we should look to calibrate, look for a chance in order to calibrate our foreign policies objective, and also our overall relationship with the US under this presidency, so that we'll be able to amass whatever gain and optimize values for this country. So we just don't want to sit back and suck in some of these policies and its impact on us. So we need to also do all this so that we'll be near ready. However, like I said earlier on, I believe the authorities, both from monetary and fiscal authorities, they are seeing this, and these are well being discussed as we speak, for them to also tighten the noose around some of these things that would pan well for us. So I believe all these, some of the things that we can capitalize on in order for us to gain optimally from some of these policies that we're expecting from the US, given that Mr. Trump is going to be on very soon.
I must thank you so much, Mr. Olushola Ore Oyeniku, the Head Corporate Strategy and Investor Relations, Keystone Bank. Thank you for making sense of this topic. Hope to see you again soon.
Thank you very much for having me.
All right, there. It is time to now stay squarely with markets, and Effiong Ekop, Markets Editor, TVC News, is live in the studio, not joining me from the exchange today. Effiong, the market is staying in green, and well, let's say partial, how do I put it, a marginal increase in what we've seen before now.
Yes, we actually seeing a very active trading session going on. This is the second time this week. Yesterday it was also positive, and last week we traded about 4 days positive. So there is a tradition now that investors are looking forward to the end of the year. Now it's about past mid of November, so they have roughly 6 weeks to go, and they are adjusting their portfolios, looking at the particular company that they believe would turn in huge profits at the end of the year, and so they key into that direction to be able to share in the interest or dividend that the company would be able to bring to the market. Today's gains, we see that MTN has come very strongly, trading and gaining over a percentage point. Then the cement company, WAPCO Lafarge, is taking a huge 10%. And then we have other big companies, Zenith, Unilever, United Capital. So all of these companies are the ones that have been able to take the market, to a higher level. We expect that this price jump will continue in the market till the end of the year. Although once in a while you will see that, because this is the time that even market speculators, they want to upload and take huge profit from their investment. So from now on, we expect that generally there will be price jumps in many of the trading sectors.
Yes. But that looks pretty good. Like you mentioned, some particular stocks playing big in the market.
Exactly. Attention would certainly go to the banking subsector.
Of course.
Because next month, December, it is the general year-end demand by the central bank for all the banks. And so many of them, normally, we see their prices graduating upward. And especially this time that some of them are coming out to ask their
raise funds.
The shareholders to help them, subscribe so that they make huge funds to meet what the central bank is already, putting the cap for their capital base. So activities, and in fact, the market's eye gets so much attention on banking securities. And if you ask me, I think majority of the banks, they are not doing badly at all. If you go through half-year reports that they have done, some of them have come out to give good dividend reports for the first half year. So we expect that full year return would be something substantial. And that's why many of the fund managers and general investors are really positioning their baskets around these financial subsectors. It is also the time that the telecom companies usually make a huge turnaround. So that's why, as MTN has indicated, it will be their season before Santa Claus will come to the market, and we believe things will go on. Generally, let's believe, if not that the economy is just weak. By this time, we begin to see a boom in the market. But whatever it is, we look forward to good play.
I must thank you so much, Effiong Ekop, for market analysis as usual. Thank you for your time.
It's a pleasure.
Well, Asian stocks rose today while the U.S. bond yields and the dollar hung back from multi-month high as traders hung back awaited President-elect Donald Trump's cabinet selection and sought to gauge the outlook for Federal Reserve's easing. Japan's Nikkei added 0.5%. Australia's equities benchmark jumped 0.8% and reached a record high. Taiwanese shares advanced 1.3%. Chinese markets were weak, though, with investors mulling potential Trump's tariff and waiting on more details of stimulus from Beijing. Hong Kong Hang Seng slipped 0.1%, reversing earlier gains, and mainland blue chip dropped 1.2%. US S&P 500 futures pointed to 0.1% higher, following a 0.4% advance overnight for the cash index. Pan-European stocks 50 futures rose 0.3%. MSCI's index world stock snapped a 4-day losing streak on Monday with a 0.35% climb, and we're up 0.1% in the latest session. Well, the International Monetary Fund is warning that tit-for-tat tariffs would undermine Asia's economic prospects, raise costs, and disrupt supply chains, even as it expects the region to remain a key engine of growth for the global economy. IMF's Asian Pacific Director, Kashtin Chambers, said this at the forum of Incable on systemic risk. The director said the tit-for-tat retaliatory tariff threatens to disrupt growth prospects across the region, leading to longer and less efficient supply chains. Savrani's remarks comes on concerns over U.S. President-elect Donald Trump's plans to impose a 60% tariff on Chinese goods and at least 10% levy on all other imports. In October, European Union decided to increase tariffs of Chinese-built vehicles by as much as 45.3%, prompting retaliation from Beijing. According to federally filings and union officials, American plane maker Boeing will lay off 2,500 workers in the United States, state of Washington, Oregon, South Carolina, and Missouri as part of its debt-heavy U.S. company's plans to cut its global workforce. Nearly 2,200 layoffs notices went to workers in Washington and another 200 in South Carolina, two states where Boeing builds commercial airliners. Boeing has declined to comment on the new layoff plans. The aerospace giant expects the workers to stay in Boeing payroll until January 17 to comply with federal requirements to notify employees at least 60 days prior to ending their employment. Well, crude oil prices edged up today, extending the previous day's rally, driven by a halt in production at Norway's Johan Sverdrup oil field, though investors remain cautious amid fears of an escalation in the Russian-Ukraine war. U.S. West Texas Intermediate crude fell to sell for $68.98 per barrel, with a downward price review of 0.26%. Brent experienced a downward price margin of 0.19% to sell for $73.16 per barrel. Bonnie Light sells for $78.62, down 2.84%. And 40 OPEC basket crude oil dealers are offering $71.23, with a downward review of 0.61%. Well, that's our show for today, Tuesday. Thank you so much for being a part of it. I'll see you tomorrow, same time, where we talk more around the world of business. Stay safe, get busy, and make the cash. I'll see ya.